Okay folks, thanks very much for coming back for another weekly market review for F45trading.com. This week we're going to be discussing February 24th to the 28th, last trading month of the week, month of February. This month and January actually flew by. It was pretty incredible. So let's get into this here right away. I am not going to spend a lot of time on the markets today doing a review, so we'll get into this right now. Looking at the Forex news for the week that's coming up. It's pretty light week. We have a couple of high impact news events for the euro, one for Australian dollar, and one for the Canadian dollar, GDP meeting minutes. This is going to be the big one for the CAD for this week. But other than that, pretty light for the rest of the week. Not a whole bunch going on. Crude oil inventory numbers, of course, on Wednesday. And that's about it. So I don't see any landmines, which is the good thing. Please just take note, it's a yen bank holiday. They have it on Sunday. You can see, though, as markets have opened at the time of this recording now, yen, like all the other pairs, have had a pretty massive gap to start out the trading week as well, too. So even though it's a bank holiday. So getting into it, looking at the US dollar, as I mentioned before, we come up and had filled in this range right here. 99.80 was the exact level that I had put on my chart, and the high from the week closing last week was 99.80.05. So bang on the money, and now we're starting to drop off a little bit. You can see how price opened up. How price closed lower on Friday and gave back just about 90% of the range of the week. Friday, Thursday, Wednesday, Tuesday. Here is Monday's low right up to Tuesday's high, and as I say, Thursday's high, and you can see price came all the way down 75% back down the range that it had gained. So going into this week here, it's going to be interesting to see what we have. We hit a major area, which is obviously evident by this huge rejection candle right here. We came straight back down immediately, didn't hesitate at all. The weekly range, going back to this again, this area has been filled, so I would highly anticipate a little bit of a retracement going down this week. What will change that? Obviously, if 99.80 gets traded above, then we're going to be looking at price running up to whoops, that's not the one I was looking for. $1. 100. Put the wrong price tag on. Sorry, folks. We're going to be looking for price to run up to probably this area right in here, which is about 125. That's what I would be looking for as an upside target for the week if 99.80 broke. So we could obviously take plenty of shorts on EurUsd, on GbpUsd, and so forth, so we don't have any issues there. But I want to see what happens going into tomorrow. As you can see, we could start to hit some areas of resistance going higher. We came in and gapped we gapped up to start the week. And so what I would honestly be anticipating is the price to roll over. So if we start getting price coming up to roughly the 99.55, 99.60 level, somewhere in there, I would kind of expect this thing to kind of be this, pop up and then drop. If we get through the 99.60 level, then I believe we'll probably target these highs up here or right there. And then we'll get up to easily, I think we'll get up to 125 on the week. So we had a pretty impressive week here last week, and price really surged. And look at this big buying price action in here. And they hadn't really come back and retraced at all, except for this one little daily candle right there. So as I say, I think it's highly probable that price is going to fall off, and we're going to get lower prices for the week. And I kind of like this area down here, 98.70 is what I'd be looking for. So we're looking about, what is that, about 70 cents lower, give or take, on US dollar. So if we see lower prices on US dollar, we're obviously going to see higher prices on EurUsd and GbpUsd. So let's look at some of those. Going into euro, we've got, again, a major level on the downside that was hit right there. As I said, price is going to come down. One of my targets was actually 107.75. Price came down on the Thursday of last week to 107.77. So missed the low by 2 little pips. And depending on the broker that you're using, that could obviously be different. Some people's brokers, it may have come in and smashed that 107.75 level and maybe even went lower. On this particular broker feed, it just missed it by 2 pips. So nonetheless, we had that range filled in, which is this big gap in price here. And so now we're just going to kind of wait and see how Monday pans out. Really, this is going to be a very easy one. So if price gets down, you see this little consolidation back here. So if price comes lower than this area in here, it's going to go lower. We're going to run the lows from last week, and we're going to continue on down to possibly fill in the rest of this range in here, and I'd be looking at about the body close of that candle right there. So that comes in at, the close came in at 107.19, so you can call it 107.20 on the downside, which could be the target. Okay, I'll put that on there now, just so it's relevant. Now, again, what I want to see, do we get past this little consolidation level right in here? And that comes in at 108.05, the exact number. And again, depending on what broker you're using, the open is 108.03. We'll call it 108.05 for argument's sake. If price goes below that level there, I would probably be looking for it to sweep this low here, and then again we'll make a run down here so we can easily trade that. But I believe what we're probably going to see is price is going to stagnate in here for a little while, and we're probably going to fail to go below this level here, in which case I'm going to be targeting higher prices. And the first level that I'll be looking at is right up around here at 109. We'll call it about 109.05. So a good 100 pips, excuse me, a little lower than that. About 80 pips from current location. If we do get a little bit of a run down into here, we can always look at that. But I'm going to be looking at higher prices for the week. Again, all depending on what we do here. If we start breaking above, as I say, this consolidation level, which was the 99, what was it now? I had to move the price tag. 99.55. If we start moving higher than 99.55, I'm going to assume we're probably going to run above this high here. Okay, so which means we'll be running below the 108.05 level on EurUsd, and then we can obviously target these areas down there. Okay, so that's what I'm looking for on those two pairs. On GbpUsd, we had, again, a little bit, we're still in this big overall consolidation, but you can you look at this and it kind of almost looks like a descending triangle. Not that I trade with those pairs or anything like that. We do have a gap on the 4-hour chart that I'll show you here in a second that is still valid all the way up at 131.90, so make sure you keep that on your chart. And we just swept the lows from here from last week, and price screamed right back up as soon as it did. I was actually looking for a lower target of 128.10 on the week last week, and we didn't get that, unfortunately. I was a little disappointed that we couldn't make that extra little push down. And the low on Thursday of last week, that came in at, I got a lot of trend lines apparently on that day. Low came in at 128.48, so it missed it by about 30 pips. And the low on this guy here was what I was actually looking for, 128.22. So missed it by about 20 pips on this down run here, unfortunately. So it's still open, it's still there. Definitely a possibility of them running it down. Again, if we start running higher on US dollar, I would anticipate GbpUsd to drop lower and into this level here. Or this could be it. This could be the downside. We have a couple equal highs up here that I've got on my chart, so make sure you look and have this level on your chart right here, and note this level, 103.70. Just for argument's sake, so we're right about there. I can't quite get it, but that's okay. 103.70. These two equal highs and this high in here. That's where I'm looking for price to get up to if we can't break down below here. Very real possibility that we could do it this week. Again, after the big push up in the US dollar, I would be expecting a little bit of retracement on this whole price swing, but you can see we are making lower lows, failed to get above this high here and made another lower low. So we're going to see what happens here. Now, just keep in mind, GbpUsd, it's going to be affected by a lot of the stuff going on in the UK with all the Brexit stuff. So it definitely hasn't been running in sync as of late with the US dollar and EurUsd as it should, albeit this small run down here from last week was in pretty much lockstep with what those other two were doing. So just bear that in mind. But we are seeing a bit of a pullback in here. So if we're going to be bullish on the week, price has got to get above this price swing here. As soon as we get above that price swing here, I think we can easily target these equal highs, as I was mentioning back in here. So that's what I'll be doing. But again, there's lots of areas below that this thing could be targeting. So it is very possible that we see a little bit of support in this area here, and price bangs up into here, and then we drop lower. That could also be the case. And price doesn't even have to come up and fill this little gap. I want you to note this on your chart though, because price will always come back in and fill gaps in price. So you got to note that on your chart. But just depending on what we do and how bullish the US dollar is and how bearish EurUsd is will depend on how much of a dip we get on GbpUsd. Okay, so just keep that in mind. Now, and I hate to say, yeah, price could go either direction. It really could. It is right in the middle of this range right here, right in the middle. So you know, again, it's just going to depend on what the US dollar does. Keep your eyes focused on US dollar. Keep your eyes focused on this gap right here. And if we start breaking lower than this blue line right in here, I believe there's a very solid chance that we're going to probably run these lows here from last week and possibly take out the area that I've been looking for at 128.10. Okay, so really all we're looking for here is if price can get above this, above this swing high here. If we're above this swing high at 129.80, then we're going to go higher and we can target those two equal highs. If price is going to go below really the level that we're at right here, and we start getting below these 1, 2, 3 lows in here, then I believe we can easily target this low here and ultimately that low there. Okay. EuroGBP, it definitely played a role in what was happening last week with the two, with EurUsd and GbpUsd. So I'll counsel you to just to have a look at this pair and just make sure you understand what this guy is doing. I'm not going to get into it today. We did have a nice little run back up into the level that I called and outlined. You can see right there, I called this thing coming back up and slamming back into these levels here. Now we're going to wait and see here what it gives us. If we start getting above this high here, then that's going to mean that it's either going to be bullish for EurUsd and cable's going to be in consolidation, or cable is going to be running lower and EurUsd will be in consolidation, just depending on the strength of the US dollar. If we go back down and take out this low here and this low here, which now we have to put this on our chart because we have two equal lows here, so we have liquidity resting in here. All the long holders are positioning all their stops right underneath those two lows. So we're going to see, do they have the strength to get back down here and take out those lows, or are we going to just keep going higher? Okay, so watch out for what this pair does because it will affect EurUsd and GbpUsd. UsCad is in a prolonged state of consolidation after this big run up as expected. You can see here we did just reach the high of this here and price has fallen off. So again, this could have been sort of an early indicator as well too for the weakness in the US dollar. If US dollar is going to fail to get back above these back into here and we do start to really pull back, UsCad could have been the leading indicator and start to decline. Basically that just shows strength in the Canadian dollar versus the US dollar, really is all that is, and we could see a bit of give back. But if price is going to go higher and try to run out these highs here and this high here, we got to get above this level right here. right about there. That candle high. If we can get above that candle high, I think we're going to go above 133. But I think if we have any weakness whatsoever in the US dollar, this price is going to fall off, and we're going to slam back into this consolidation here and ultimately probably get under here. So right now we're just right in the middle of the range, so we'll have to hold off on that until it gives us a little more information. And as I mentioned before, US yen had a holiday on Sunday, but that didn't stop this thing from gapping down. And you can see that gap's been closed now, and we're starting to see a little bit of bullish activity. But again, if we do see weakness in US dollar, this thing is going to give back quite a bit. And I don't know if you guys are yen traders, but look at this trade last Wednesday. Like, we had a 170 pip range day on US yen. Biggest day in, I don't know, a very, look at this day right here. Bam. Biggest day in trading in, well, probably since all the way back down here, since we had this big black swan day on US yen on January 1st. Excuse me, that would have been January 2nd. Nope, I was wrong, January 3rd. So, big trading day. Finally nice to see yen is starting to break out a little bit. I wouldn't be surprised if we do give a little bit of it back. You can see now prices coming right back up into the close of Friday. It kind of wicked into it a little bit. I guess at the end of the day, it's going to be real simple, guys. If price stays below 111.60, then we're going to close this range back in here, and we're probably going to retest this consolidation level here. So I'm going to actually drag this out. And it could take them a week to get back down there. I know it only took us a day to get up here, but I wouldn't be surprised if they just start to slowly give back on this range here. And then when we get back into here, we'll have to see what they want to do. But I'm looking for lower prices on yen. Obviously, what will change that is if we go back above 111.60 in that area, then I think we can probably target the 112.40 level as that's going to be the new high coming in here. Okay, so if you're a yen trader, just watch those levels there. 111.60. If we're above that, we're 112.40. If we're below 111.60, I think we're going to come back down to 110.30. Okay. Aussie dollar, we had a big sell-off in Aussie dollar. This thing is getting crushed, and if you look all the way back, I got to go out onto the monthly, and this is the last time we've been down in this area, all the way back in 2008. Aussie's getting killed, so basically it's obviously running down because of the strength of the US dollar, of course. We all know that, and a lot of pairs are. But very simply, we had a gap to open the day. We've since come back and filled that gap, very similar to what I just mentioned on the last chart. If price can stay below 0.6615, I guess would probably be the best price on it. Right about there. I think there's a very, like, as long as we don't take out the high. So I'm going to go drop down to the hourly here. So as long as, well, now look, I say that now, and we have a little bit of a gap here. So we have the high coming in at the time of this video. It is Sunday, my local time. It's just creeping on to New York midnight. So it's well into the Asian range, and London open for Monday's about to start. We certainly could get them running back above this level here, but I'd like to see them stay below. I don't want to see them come up and have to give back their range on Friday, and if that happens, then they could have to trade all the way back up into here, and that's not going to be super bearish for Australian dollars. So if that does happen, again, this would be your target. So if we trade above, and then that would mean obviously we see a drop on US dollar. We'll call it 65 for argument's sake. But I would say if we're above 66.15, we're going to trade up here. So that's about a 40 pip tradable play in there. Possibly even a little bit higher. If we stay below 66.15, then we're probably just going to keep dropping. And Aussie is not going to come back anytime soon. But I'd really like to see them close this range in, and then if it is going to go lower, bounce from there, as opposed to leaving that open. Just because anytime they leave price open like that, it's always a question of whether they're going to come back up there and close that in, versus if they do that now or sometime this week, then that closes that door, and then you can just get in on the shorts, and away you go for lower prices. So that's Australian dollar, folks. If we're below 66.15, And again, you'll have to pick a target on the weekly because there's lots of targets in here. I'm not going to do that for the scope of this this video because that'll take too long, but you'll have to go down to the daily charts, pick some levels in here, some equal lows, you know, some consolidation levels as targets, things like that, and pick your targets. If we stay below 66.15, if we're above 66.15, then we're going to come up and target in here, back to this consolidation level. Okay. Crude oil, look at the big drop on crude oil from Friday. Price closed at 53.40 and it opened at on Sunday at 52.40, so it dropped a full $1. Unbelievable. Sometimes crude oil can just, I mean, anybody going long on crude oil just got stopped out. So this is a very telling sign that they're doing that. You know, they're opening up lower than on Sundays with that instead of running price down during regular trading hours. It's a sign to me that says they're taking everybody's stop out who was long on this run here. So everybody who was long going into last week probably sucked all of their stops up right underneath here or underneath the lows from last Friday, and then they just slammed down to take those all out. And I'll bet you they're probably just going to run this thing higher from there. What changes that, obviously, if we hit this swing low right down there, if we run lower than this swing low down here, then we're probably going to start targeting some of these levels down here. But I think for now, there's a very good chance we could run this thing higher on the week. So I'm going to leave it at that just because I want to see what happens. Do they close this gap right away? And then do we start seeing bullish prices from there, or does this thing just keep running down and take out this low here? Okay, I've mentioned this before. This swing low, this low here, and this higher low, it's a little bit suspect to me, and I'm kind of the opinion that they're going to come back down and run that one more time. And this is a pretty good indication that they may do that. They could just dogpile on the shorts on here, and they could shoot this thing down, and we could be in all the way back down to these levels that I had mentioned before at 40, call it 47. So just bear that in mind. Keep that on your chart, that it certainly is a possibility. It's open and it's available for them to come down. And I have a strong suspicion that this could be alluding to it. But if we start trading above 53.40 and that gap is closed and they have no inclination of coming back down, then we're going to start targeting the 57s, okay? And finally, gold. Look at gold screaming up from last week. This is unbelievable. Look at this move on gold. I mean, absolutely massive. That is a huge run in gold. 10,000 ticks on gold. Pretty impressive in 1 week. That's a big movement. If you guys had one contract on there, that would be a very big movement. Now, obviously, I'm not advocating you trade gold with live funds. This is all demo account, of course, and all hypothetical. But just, yeah, pretty incredible. And unfortunately, I'd have to switch over to another trading platform to show you the levels that predate this chart, because I'm only getting data back to 2017, 2016 probably. So I don't have the full chart, unfortunately. So we'll have to leave it at that. I'll do a more in-depth analysis for you guys on this, on gold. If do me a favor, if you guys want to see some in-depth analysis on gold, just shoot me a tweet at F45 Trading, or send me an email, or go jump onto my free Telegram. By the way, here's my free Telegram, which I haven't advertised in a little while. It's F45 Trading, free Forex market analysis and signals. If you guys would like to join that, you're more than welcome. I'll put the link here actually for you guys to join, and then you can go ahead and do that yourself. I'll just put it right here. I talk about a lot of signals and a lot of market action daily on it. So if you don't want to join our membership group, or you want to sort of dip your toe in the water and see what it's all about before you do, go ahead and check me out at on Telegram right here. Okay, and I'll also put this link in the YouTube in the clickable description down below, so you can click it and actually join it from there as well too. So, but I will talk about gold a little bit more in a future analysis. This is pretty impressive, and the reason why, folks, at the end of the day, and I'm going to wrap this up here, is because of all the uncertainty in the markets. U.S. economy is very, very strong right now. Every single economist out there under the sun is predicting a huge market crash coming. The coronavirus is going on. I mean, there's 100 reasons why gold is running up, but basically it just all boils down to security and safety. There's safety in this metal, and I think people are dogpiling on this right now to do that, because there is a little bit of uncertainty in the markets right now. And just because the S&P is running without any potential top forming, I doubt this will be the top. They'll probably run it again. Doesn't mean that eventually this will fall off, and I think people are getting a little bit nervous about that fact, and they're piling into gold, which is what you see right here. So, okay, that's all I've got to say about that. Thank you very much for watching. If you want any more information, go ahead and jump on to f45trading.com, and I will, and my email and all my social media stuff is on there, so please go ahead and subscribe to my YouTube channel while you're here watching as well, if you haven't already, and we will catch up to you for another recording next week, or catch me in my free chat room right here as well too at F45 Trading. Thanks for watching, guys. Have a great week.